Fed said more of the same, need more data. I'm Darren, and this is 3 things you need to know for Thursday, March 7th. Presidential candidate Nikki Haley has finally given up on the pursuit of the presidency. On the way out, she did not endorse her primary opponent, President Trump. It will be interesting to see what her next steps are and which political shows will race to get her. The climate change agenda is getting scaled back some at the SEC. With the vote of 3-2, a final rule requiring some companies to disclose their climate impact was passed. It was certainly a scaled-down version of the Scope 3 disclosures that were in the original proposal. Most likely, Congress and lawyers will take it from here to debate. NYCB bought the assets of Signature Bank last year when it and Silicon Valley Bank were part of the mini banking crisis. Now NYCB is showing troubles as it tries to stay afloat. After credit agencies cut the bank's ratings, the stock price fell quickly, hitting a low of $1.70. Trade while you sleep it across time zones with Arbitrage Trade Assist. Sign up today at arbitragetrade.com. Arbitrage Trade is your trusted source for business, finance, and tech info.
Hi. I'm your retirement fear. But don't be scared. You're still in pre-retirement.
Does that mean I have more time to plan?
Precisely. Here, this is pretirement.org.
Retirement savings options? Potential tax breaks.
Move.
This isn't scary. I'm doing it.
You got this.
Visit thisispretirement.org for free resources to help you customize your action plan.
Understanding market makers, the engine behind financial markets. Daniel writes, in the intricate world of financial markets, market makers play a pivotal role, yet their function and influence often remain shrouded in complexity for the average investor. Today, we will demystify the concept of market makers, shedding light on their operations, contributions to liquidity, revenue generation strategies, and the controversies surrounding firms like Citadel. A market maker is an individual or firm that actively quotes two-sided markets in a security, providing bids and asks, along with the market size of each. The presence means that at any given moment, there is a buy and sell price for the securities they cover, facilitating immediate transactions for traders and investors. Market makers are found in various asset markets, including stocks, bonds, currencies, and commodities. Market makers operate by holding a certain amount of asset to facilitate trading. Their core function is to ensure that there's enough volume on both the buy and sell sides to make trades possible without significant delays. They make this happen by providing continuous buy and sell quotes for a guaranteed number of shares. They also hold stocks or assets to meet trading demand, and then they aim to maintain a balanced book to minimize risk, where the value of buy orders matches the value of sell orders. They dynamically adjust bid and ask prices based on market conditions and order flow to manage inventory and risks. Market makers are linchpins in enhancing market liquidity. Liquidity refers to the ease with which an asset can be bought or sold in the market without affecting its price. By guaranteeing a certain level of activity and providing continuous quotes, market makers reduce the bid-ask spread, which is the difference between the highest price that buyers are willing to pay and the lowest price that sellers are willing to accept. This reduction in spreads makes it easier and more efficient for investors to enter and exit positions, thereby increasing the overall liquidity of the market. So how do these guys make money? Well, they primarily do through the bid-ask spread, by buying at the bid price and selling at the ask price. They profit from the spread between these two prices. Additionally, market makers may receive compensation for providing liquidity in the form of rebates or reduced fees from exchanges. They also engage in proprietary trading, using their own strategies to take positions in the market, although this involves higher risk and is a conflict of interest. The role of market makers is not without its controversies. With firms like Citadel coming under scrutiny, critics argue that market makers can have an outsized influence on the market, potentially leading to conflicts of interest, especially when they offer other financial services. For instance, concerns have been raised about the potential for market manipulation, preferential treatment for certain orders, and the opaque nature of their operations. This debate intensified with the GameStop trading frenzy in early 2021, where the role of market makers in handling order flows and their relationships with trading platforms came under public and regulatory examination. Market makers are integral to the smooth functioning of financial markets, ensuring liquidity and facilitating efficient trading. While their operations enable a more vibrant market environment, the complexity and power of market makers necessitate ongoing scrutiny and regulation to safeguard market integrity. Understanding the role of market makers is crucial for anyone involved in the financial markets, whether as a trader, investor, or regulator. As the financial landscape evolves, the discussion around market makers and their impact on market dynamics is sure to continue, underscoring the importance of transparency and fairness in financial markets. Stop watching, start living using PIPS, our AI bot. Go to arbitragetrade.com and check out Arbitrage Trade Assist.
Women are bad with money. That's what the world's been saying for centuries. But now, we've got something to say. Save it.
It's time to save ourselves by saving our money.
Until we're no longer 80% more likely than men to live in poverty in retirement.
Save it. The falsehoods, the feelings of fault.
Then, the funds. Learn how to save for your retirement at WeSaySaveIt.org.
Pips, pick of the day, but it's Throwback Thursday, where I'll review past Pips wins. I'm calling this one 14-9, 2 times is fine. Monday through Wednesday, I give you picks of the day, and then on Thursdays, I review all the past wins, and then Pips makes that easy for me with his 12 indicators. This week, it's Yext. It's a software development company that offers a cloud-based digital knowledge platform, and we picked this twice now. We picked it at September 20th, and it started at $6.20 and ran to $7.09. I'll do the math for you. That's a 14% win. And then again on January 22nd, we picked it as the pick of the day, and it ran up 9% from there up to $6.46 from $5.92. So that's twice. 2 times is fine. Remember, we are not financial advisors. We offer a service at arbitragetrade.com. So please do your own research.
Arbitrage Trade Analytics LLC is a privately held research company. Arbitrage Trade Analytics LLC is solely responsible for the preparation and distribution of the contents of this podcast. The opinions offered in this podcast are for informational purposes only and are not intended to function as investment advice. Seek a duly licensed professional for investment advice. For more information about the informational research and services offered by Arbitrage Trade Analytics LLC, please visit arbitragetrade.com.